Today on the podcast, I sat down with Rodrigo, Seira of Cooley and Ron Hammond of the Blockchain Association. We talked about the impact of the recent elections and what we should expect to see in the coming months in the blockchain industry. This one was a deep dive into specific bills and potential administrative actions that could really move this industry forward. I think you'll enjoy this one, so without further ado, here's my conversation with Rodrigo and Ron.
Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Rodrigo and Ron, thanks so much for joining us today on the podcast. I always love talking about crypto policy when it's going in our direction, so this should be a fun episode.
Yeah, great to be here, man. Thanks for having me.
Yeah, likewise.
Before we hop in, just so people know who's talking, why don't we just start with some quick introductions? Maybe start with you, Rodrigo, and then you, Ron.
I'm Rodrigo Seira. I'm special counsel at Cooley's new Miami office. And I'm outside counsel to crypto founders and investors, working a lot of financings, token distributions, and just general product design work for crypto startups.
And I'm Ron Hammond. I am the Director of Government Relations and Institutional Relations for the Blockchain Association. So it is a trade association based in DC, about 100 companies, range the gambit from stablecoin issuers, centralized exchanges, DeFi, venture capital, and plenty more. So I'm the Republican lobbyist, so I do both House, Senate, and now soon to be the admin. So it's a lot to cover for one person, but it's been really exciting. And before that, I was Ripple's in-house lobbyist for a year. And then before that, I was with Congressman Warren Davidson for 5 years. I was his crypto staffer and wrote the first bipartisan crypto market structure regulatory bill, known as the Token Taxonomy Act. In various iterations, it's now called FIT 21 famously. Been here since day one in crypto policy, so I'm really excited to get into it.
Well, I'm excited to get into it. My first question will be a very general one that I'd love both of your takes on. It feels like a lot has shifted in a positive direction in a short period of time here. What's your overall take on just what happened with the election and what the impact is to the overall crypto industry?
I can try to maybe take a first stab at that. The joke that I've been telling is that it somewhat feels like the day after Prohibition ended, which is both a cause to celebrate, but also maybe a word of warning that we shouldn't get too drunk here. So I think I'm cautiously optimistic about the change. I think it does represent a fundamental shift in the regulatory landscape. However, I worry about a lot of clients and investors overcorrecting a little bit here. And I think it really requires us to take a more nuanced view at what the different types of actions and the different types of actors that are in the space. It's been heavily rumored, for example, that Paul Atkins is going to be the next SEC chairperson. I think under his administration, we probably see a much more favorable SEC regime. I think probably the most likely thing to change in the short term is a sharp decrease in new lawsuits that the SEC brings alleging registration violations only. If you look at some of the statements that Commissioner Peirce and Commissioner Marcueta have made, I think it's clear that both of them think that the current SEC regime is not purpose fit for crypto, and they don't think that suing crypto projects for failing to register is a helpful approach. So I would think that under the next SEC admin, those types of lawsuits will decrease significantly. I distinguish from that any lawsuit that has allegation of fraud or some other consumer harm, which I think any SEC administration is going to be still interested in bringing and motivated to bring. And I think it also importantly leaves out potential new lawsuits from private plaintiffs, notwithstanding who's in the White House January 20th or who's at the SEC offices. The law is not going to change that day. And we have now case law, particularly in the Ninth Circuit in California, that is pretty favorable to plaintiffs that are suing crypto projects, including under this new theory that token holders and DAOs can be general partnerships. So I would expect those lawsuits to continue. For those folks, the landscape hasn't really changed and they have had some early success. So I would see that continuing. And then I think on a more general level, what we're going to see is the SEC to try to make a concerted effort to restart, or maybe this is hopeful thinking, but to restart discussions with the administration. Under, for example, the Clayton SEC admin, there was a lot of healthy discourse with industry, and the SEC gave some exemptive relief in the way of no action letters. All of that basically totally broke down, in my view, under Gensler. And I think it's something that's not lost to folks like Commissioner Peirce. So I would think that they're going to be very interested in restarting those discussions. I think we'll see folks from FinHub, like Values to Panic, who used to be often going to crypto conferences and other industry events. I think you'll see those folks go back into the public more and hopefully a little bit more exemptive relief. Outside of that, I think we can talk a little bit more about the rules and the legislator proposals later. That's my initial high-level take.
That's great. Ron, what's your take just overall?
I'll give you more of a congressional view because it's more of my wheelhouse. It's night and day. The 2-year turnaround from the FTX collapse to where it's going right now and just the vibes shift has been incredibly noticeable. For example, 2 years ago, after FTX, my Democrat colleague in particular was having a really hard time even just having a dialogue with many senior Democrats and staff on committee. There was just an overall view that crypto was done. They lumped in SBF with all the industry because SBF was very much out and about and throwing wads of cash at folks and his own customers to politicians here. And you also have to remember, too, the politicians that many of them gave their funds back or donated it elsewhere, they had to raise money from other constituents, other organizations to pay back the FTX situation. And that really left a bad taste in mouth. It's one thing to raise for your own campaign. It's another thing to pay back someone for a fraud that you had no idea that was happening at the time that you took the money. So that really left a bad taste in folks' mouth. It is night and day difference now. And my Democrat colleague to that point, too, just got off the phone with him. He was at an event with VP Harris and a lot of the senior Democrats and very much welcoming, talking about how they thought they weren't doing too good on the crypto vote. And that was potentially one reason why they didn't get the White House and the results they wanted in the election. So hearing him being in the room in these conversations at this event, whereas 2 years ago, he would not even been invited to that, has been just a night and day difference. And then on the Republican side, the optimism is just pouring in here. I mean, I just got 2 emails already just now for staff going to work on priorities for 2025, all positive, all in different tangents here. So now it's more harnessing and moving a lot of that energy and a lot of the good we built up in the past year and harnessing that into actually getting stuff done next year, 2 years, which can be surprisingly a little harder than a lot of folks think. And to Rodrigo's point, the laws don't change on January 20th. There's going to be a lot of time before we start seeing some rule changes on the books. And there's a lot of things that can go wrong in Congress too. Politics always messes things up, as we've seen plenty of times before. So I'm cautiously optimistic, but we have a lot of tough battles ahead. Again, most of that's going to be within the industry itself, where we're going to have to get a lot of the centralized exchanges and a lot of the folks in DeFi, for example, on the same page for regulation. And that can be really difficult. So it's by no means going to be a cakewalk. It's going to be pretty difficult.
Well, definitely a lot of battles ahead. And maybe just to stay on the election for the next question, the industry really did get its act together, at least a little bit from my perspective, in terms of how to approach congressional elections during this cycle. So the impact of Fair Shake and some of the capital that was raised and some of the overall effort to get out the vote in places like Ohio and Montana seemed like it was the first time that as an industry, we really came together and pushed back. Curious your guys' view on Fair Shake and some of the other overall efforts to play a more active role in some of these races.
Huge. Back in 2017, 2018, when I was working on this more from the Capitol Hill side as a Hill staffer, campaign donations, obviously we don't deal with that as a Hill staffer, but we would look at the FEC reports. And I would notice, even though we were one of the very few pro-crypto members of Congress at the time and doing everything we could to listen to the industry and hear the concerns and work on legislation back then, the industry was saying, well, we don't play the DC rule games here. We're crypto. We're different. And I think that's where the crypto maturity has really come to DC, is that they realized, look, the DC game, we're all about disrupting a lot of things, and we have on several fronts. But sometimes you got to play the game a little bit. And I think Fair Shake is an epitome of they play the DC game. Dollars do talk in DC. And the amount of candidates who are coming to the industry, they were coming even to Blockchain Association, they're coming to other groups, other companies, not even sometimes for a Fair Shake angle, but more just, we know you guys are the big dogs in town. Obviously, I want to be helpful with the industry. Obviously, I want to win this election. Please tell me how I can get on crypto. And the number of conversations on a candidate level I had on the Republican side especially was astronomical. And I think Fair Shake did a really good job, at least bringing it down between Republicans and Democrats. So there was this view of, hey, this is a momentum shift. And also it's a younger generational momentum shift. And also they did things like not really attacking incumbents minus like Seira Brown, who has been very much noticeably really bad in crypto. Every single time that we had a stablecoin bill, for example, 2 years ago, right to be finished, to go across the finish line, Seira Brown killed it. He's killed it several other times in the past. Again, these are private discussions, but we've had so much time where we've had the momentum there, and all we need is him to check the box, and he never did. So I think Fairshake did a good job. They took a lot of guts to go after the Senate banking member in particular and then chair at that, but it worked. And then I think we have a really good playing field for next year to go forward. The crypto folks need to remember, that's just one election. There's another one in 2 years. And guess what? We are going to be hit up a lot. And I'm glad the Fairshake folks are doubling down on their efforts for 2026. So let's hope that continues, because that's how the banks have done so well in DC. That's how other industries have done so well, is that they play the DC game. And I think crypto, for the small, scrappy bunch we did pretty dang well. Of course, the dollar amounts really do help. And we were very significant in the grand scheme of things.
Yeah, and hard to see who was on the other side of that. It just continually baffles me. I'm not sure whose vote was being sought by being anti-crypto, if you're Sherrod Brown.
I think that's one of the key points for me, is that I think this election proved that the anti-crypto army was a political loser, that you were basically incentivizing a very ardent group of crypto supporters to vote against you, and you weren't really getting much juice out of that. I think the other important point to bring out here is just to note the effort that this took to put together and the mind shift that it required from the industry. A lot of the crypto OGs are cypherpunk anarchists that would want nothing less than to have to spend a day in DC shaking hands with folks like Ron, no offense. But I think motivated, at least in part, by Gary Gensler's super aggressive enforcement campaign, a lot of the people that were very deeply invested in the industry realized that either they were at the table or they were being served for dinner. So they made a concerted effort to put a lot of money and effort behind, and it took a real coalition building to get everybody behind that. And yes, I think we definitely flexed our muscle politically. We proved that the anti-crypto army is not a good platform, but we need to double down and keep it going so that it's not just this cycle. Like Ron said, I think the announcement after the election that Coinbase and others, and recent also announced that they were contributing more to Fairshake. I think those are critical to make sure that this has lasting impact.
I couldn't agree more. So maybe just transitioning here into what starts to happen in January. We touched on a little bit already at the SEC, but there's a lot that the SEC ought to do here. There's a lot of correcting things that have happened over the last 4 years, but there's also just what is the path forward for the industry and overall for financial services. And things I'm thinking about are rulemaking, no action letters. You mentioned the exemptive relief. Let's get rid of SAB 121. Let's start talking about the custody rule. Let's start talking about some of these ATS venues for security tokens. There's a lot of stuff to do. How do you guys think about what the prioritization should be here and what we should realistically expect in year one?
I think maybe even before we get to that point, I think there's still some risk and some question about whether there's any further enforcement actions that are going to be brought by this administration. Jake famously sued Ripple on his last day as SEC chair, which I think was December 23rd or something like that. I hope that doesn't happen. And I think it's not going to, because as opposed to, for example, the transition between Clayton and Gensler, this admin transition entails a clear shift in crypto policy that the electorate has expressed. So I think it would be somewhat foolish for the administration to bring, for example, the cases against Uniswap or OpenSea. But that's still out there. And I think we need to hold our breath until the changing of the guard there. Looking forward more, the first thing that the SEC could do after reestablishing more the dialogue with the industry is get rid of some of the proposed and adopted rules that are really unpopular. SAB 121 is hopefully on the chopping block. Something like the proposed rule for amending 3B16 under the Exchange Act, which would expand the definition of exchange to include what the SEC called communication protocols, which is basically an attempt to expand the definition of exchange to capture AMMs and other crypto decentralized exchanges. Hopefully that gets shelved. And after that, I think there's a fair amount that a motivated SEC staff could do just on the basis of rulemaking and guidance. So, for example, the law's a mess around airdrops, and it has led to a lot of projects really having these distribution mechanisms that are very contorted and not the most efficient way to distribute tokens, but really just a reaction to what they see as the regulatory pressures. So I think the SEC could do a lot of good by clarifying their position on airdrops, things like that.
I'll piggyback off that too, and again, more focus on Congress, at least quickly in the SEC. So we've been having these conversations with the SEC staff, especially with Person Ueda post-election. It seems like potentially we'll tease something a little more fleshed out at our summit in 2 weeks when they're both speaking. So I'm excited to see what they're thinking on that front. But the wheels have already started in motion. They've already started identifying where they should potentially act here. I think actually that's going to be really important for the congressional actions afterwards. There's a lot of questions of how much can the SEC do? How much does the CFTC can do on rulemakings and such? And what does Congress need to fill the gaps in for to prevent a Gensler coming back into power years down the road and really railroading this industry again? So I think a lot of actions going to be at the SEC are going to determine what happens in Congress, which is actually perfect because Congress is going to be pretty tied up for quite some time on nominations in the Senate. Then they're going to have the big spending fight in March that it could result in a shutdown, could result in a lot of drama. The House is going to be operating off a 1-vote margin, which is the closest margin ever in history. And that is going to create so much drama and could really stall a lot of things here. So, and then last, we go to tax. Tax is going to be the next big thing after the big budget fight in March. The tax bill could go all the way to the summer. And there will be crypto provisions in there. We're already having those conversations, have been for quite some time. So at least when it comes to the congressional side, it looks like tax is going to actually be more of the first stuff tackled. We could see stablecoins moving as well. I'm predicting that's more fall timeframe, but it is the main hurdle for that bill was the Fed, Treasury, and Brainerd. And those folks are all gone. So much easier pathway for stablecoins here. And then I think for things like FIT21, for example, market structure, that's where a lot of the question marks come into play of how far is the SEC and CFTC, can they go on the rulemaking side? And what does Congress need to fill those gaps in? And that can create a lot of uncertainty in terms of the future for market structure. So that's one of those bills where I think a lot of talks and developments that I referenced earlier within the industry as well with policymakers are going to be occurring. But to Rodrigo's point, a lot of this stuff is going to be happening at the agency level first. We will likely see some Trump executive orders, probably around debanking and a few other ESG stuff that could help mining. But for the most part, I think we're going to see a lot of stuff happen towards the middle part of 2025, if not the later part for Congress.
A lot of good stuff there from both of you. Rodrigo, just to maybe jump on what you said about enforcement actions that could happen between now and January 20th. If I recall correctly, Clayton actually, at least the rumor was, went to Gensler and said, look, I have this Ripple thing. Do you want to take it up? And he got the nod maybe from Gensler and he still pursued it. So I guess you would just hope that there's that professional courtesy during this transition, which maybe is too much to ask for.
Again, I'm hopeful that it doesn't come to that. From like a Machiavellian perspective, it could be a ploy to try to enshrine your policy choices by tying the next administration's hands. A lot of people expect that the new admin will, for example, settle the ongoing cases with all the exchanges. And I'm hopeful that they will eventually get there. But I do think people are probably underestimating the effort and how complicated that is going to be for the agency. I don't think it's the case that the next administration could simply just settle all the cases that they disagreed with right away without creating a mess. They're going to be, Justin Slaughter the other day said, the SEC is like an oil tanker. It's not going to shift on a dime. And the folks there are going to be focused on making sure there's some semblance of continuity and making sure that the market is not totally whipsawed by huge changes in direction here. So I do think that it could be a way to limit the next administration and the choices that they can make and somewhat enshrine the crypto policy choices of this admin, but I hope it doesn't get to that. I think the other thing that's worth mentioning in the background of it is we've seen a lot of appeals courts, even last week with a tornado cash designation, show a willingness to curtail what they see as administrative overreach. So even outside of the change in administration, there's this other broader trend in the legal landscape in the US, which is a lot of federal agencies are getting a lot less discretion. This has obviously been impacted by the overturning of the Chevron deference in the Lauper Wright case. So I'm hoping that that also adds more pressure on the current admin to not take any drastic actions and to reconsider any lawsuits that might stretch the limits of their jurisdiction.
So Ron, when you think about this from a congressional side and what the industry should be pushing for, it does seem like we have this window of time here where we need to get some laws passed so that we can't have this happen again, what has happened to the industry here over the last 4 years. So it sounds like stablecoins first, and then maybe market structure would be the next big thing. But how do you think about the timeline for that? How should the industry be working in a way that is productive to get some of these things to actually happen?
This is going to be the major next set of fights that we're going to have within the lobbying side. I'm excited to see how this fight is going to evolve because we've been playing defense for so long. And then towards the end of Gensler's tenure, we played a lot of offense. That worked out well. But now it's shifting totally to be like, all right, we got to get constructive and we need to work together here. And this is where a lot of the new players, the TradFi folks who are coming in, who are lobbying on this stuff, are really going to be impactful, both for good and for bad, candidly. So I've run into this issue a lot. Even when I was working on the crypto framework bill in 2017, I knew it wasn't going to pass. I knew it was just going to be a marker, but it was going to be a bipartisan marker. But even then, I was getting crapped on by a lot of folks in the industry after the bill text came out. because a lot of people said, like, you didn't take this definition or you didn't take this approach. And I was like, well, DeFi likes this and the central exchange like this. And then I think that kind of jockeying, going back and forth is really, really critical. And that's the part that has been a major issue in the crypto industry behind the scenes, is just getting folks to all agree on a baseline of what can we all agree with as an industry. Because to Rodrigo's point earlier, there is still that, I'd say like 10% now, but there is that cohort of folks who are very loud, who talk about one regulation, but when the time comes for crunch time, they hate everything. There are going to be rules coming, guys. And this is really important. We have to understand that this is going to be needed to move crypto forward in the United States to have this framework. So we need to get on board. There has to be some concessions, again, for big or small players potentially. So we'll just have to see how it goes. And at the same time, also understanding where the red lines are. If there are some concessions that can be made, so be it. Again, for the instance, like the stablecoin bill has an algorithmic stablecoin moratorium, 2 years. Now, originally, they wanted to ban algorithmic stablecoins, and this is all in response to Terra. We got it down very significantly to just a moratorium. We also got to points where things like DAI were protected and such. There was a grandfathering clause as well. And overall, the industry, for the most part, got good with that position. Even though it's a little bit of a concession, there was an understanding it's still good for the industry as a whole. And I think that those are the tough conversations that are going to have to keep going when it comes to market structure, when it comes to non-bank versus bank issuing stablecoins and various other things down the road. So not even forgetting privacy, Tornado Cash, all these other issues that are still be front and center, both in the courts and in Congress. So again, I'm optimistic, but when I laid out that time frame in terms of Congress being pretty busy the first 6 months, that leaves actually candidly about a year left, because the last 6 months of Congress in 2026, they're going to be out campaigning. So you really have a year to move this stuff forward. And then we will likely have a Democrat Senate in 2026. The map does not look good for Republicans. So that Senate Democrats can really block a lot of stuff that comes out of Congress. And then you're really solely relying on the agencies, and everything they do can get reversed if there's a change in administration in 2028. So there's a lot of things we have to make sure we get stopgaps in for, play defense when appropriate, but also advance as much as we can, because there is a potential understanding that these could be the next 2 years that something happens, and then we're sitting dead in the water for the next 6 years. And that does not happen, especially if we want to take the lead here.
Maybe to highlight the point that Ron made and turn it into more of a call to action, I think, and I'm totally guilty of this, it's much easier to criticize than to be constructive. And the whole crypto industry has been in a position where all we've really done in the last couple of years is criticize the admin. And now we need to shift gears significantly and re-engage and also compromise if we're going to be able to do something. And I think the compromise part is going to be really tough, because people are very idealistic in this space, and they come to it with like deep philosophies that don't necessarily always allow for a compromise. But at the end of the day, that is how Washington works. So it's going to require a lot of work from folks like Ron to consensus build around what are going to be maybe not perfect solutions for everybody, but improvements and a framework that allows crypto to develop in the US.
The amount of Hill staffers that get pro-crypto legislation or things that trying to help the industry, the amount of times they send me tweets from executives in the industry, either shit-talking their bill or shit-talking their effort. I am trying to help these guys out, and I'm getting nothing but just absolute dogged on. What the hell is happening? Why can't these guys ever be excited? And so it's stuff like that. I personally experienced that in 2017. This space, everyone's on Twitter now, or X or whatever. So when you shout out into X, the members of Congress see it. Trump could see it. There's a lot of players that can see it. And there have been multiple times those tweets have backfired significantly, especially when it comes to our allies on Capitol Hill or emboldening our opponents on Capitol Hill. I'm not saying anyone's going to take any advice here, but the number of times I've had my favorite stories, like JD Vance, last year when I met with him, Brian Armstrong, Fred Ursum, literally was referencing CEO tweets of, please tell the CEO to stop, because Senator Warren is showing his tweets on the Senate floor and literally gaining co-sponsors on her bill, because she is saying the entire crypto industry is this guy. And this guy is misogynistic, and he's saying terrible things, and he doesn't even like the Republicans that are supporting him. And that dynamic really need to clamp down on. And again, that came from JD Vance personally, not his staff. And it's weird now he's going to be VP. So this is just the dynamic we're going to be facing. And I think everyone should be aware that, Rodrigo's point, we got to be constructive here, and we have a very limited window. And if we just fight within ourselves, we could squander that, and we could get crushed again in 4 years.
So, Ron, in terms of a compromise here, or what a market structure bill could look like, do you imagine this would just be a centralized company-focused bill, or do you think that this would cover DeFi? What are the vectors for compromise here?
So there have been a lot of, the DeFi piece was a very significant hurdle. And eventually they got to saying, let's just touch DeFi later on. They took the Mika approach of saying, we'll punt later on. And again, that had a lot of back push from folks on the Republican side and mostly on the Democrat side. Because the view in Congress is like, hey, we don't really pass big bills that often. So when we do, we want to make sure we stopgap any potential loopholes and stuff like that. So let's try to write the perfect bill, which is impossible because especially in this space, it evolves so quickly. So at least right now, I'm pretty confident we'll still get DeFi protections here. This is the unfortunate truth is that MiCA has been light years ahead of the United States, or the EU has, with their MiCA framework. And that has been setting the tone a lot for the United States of having to follow suit of what the EU has done. And that usually doesn't have been the case. But the United States has been unfortunately fallen to that trend in the past 10, 20 years. So the hope is that we can maybe be a lot more proactive here, or at least be a little more forward thinking. And again, I think that does include at least carving out DeFi. But I will lastly say the DeFi conversations are happening on Capitol Hill. There was the first DeFi hearing in September, and there is a recognition of we need to start working on our framework. So I do think we can see a DeFi framework. It'll be a separate provision, but I think we can see some efforts there in the next 2 years. By no means do I think it's going to get signed into law, but it's a conversation that's happening on the Hill. We just can't keep hunting it down the road. We need to start having these conversations of just what does that regulatory framework look like for DeFi, with the understanding it's different from CeFi, which that took about 3 years to get them to recognize that, but we're making progress here.
I want to switch gears a little bit and talk about the bank regulator side of this. So if we do live in a world eventually, at some point in the future, a terrible world it would be to have Elizabeth Warren as the head of Senate banking at some point in the future. And it's definitely possible, but if we do live in that world, you want to live in that world where there are protections against some of the things that have happened over the past few years around crypto founders and their companies getting debanked and deplatformed, around things like what happened to NYDIG with the FDIC coming in and just basically kneecapping their whole initiative to onboard regional banks with a Bitcoin custody product. How can we make sure that that doesn't happen again?
So I worked on the choke point stuff in Congress, or 1.0, and then I worked on the debanking stuff more on the industry side for crypto. So I've seen this battle play on two fronts here over about 10 years now. And I really hated how we called it choke point 2.0 while folks were saying that, because that instantly got back to the partisan nature of what choke point 1.0 evolved into over time, which was anytime there was a mass shooting or an instance with a firearm, there was a lot of reaction from Capitol Hill saying, well, we can't ban the Second Amendment, but let's try to choke it off as much as we can. And that's a lot of what eventually led to choke point 1.0 in the Obama era. And naturally, Republicans were really very much defensive on the Second Amendment, and they fell into that camp. Democrats, when they learned that sex workers are getting debanked, that's where they got involved. And they said, hey, we should not be debanking anyone, the sex workers here. This is a legitimate line of industry. So fast forward a couple of years here to the crypto side of things. And the problem that we always had was that we never got the smoking gun. We always knew that the Fed was talking verbally, but they would never put anything in writing. Very strategic. And it is very much behind the scenes and very dirty. And just the amount of folks who are getting debanked from all sorts of businesses was pretty shocking. So there are bills out there in Congress right now to prevent that. We could see potentially one of the two men running for House Financial Services chair, one of the four. He is leading one of the bills that actually prevents choke point entirely. But the one thing I think folks need to understand is that the banks like choke point stuff. They like that discretion. And I'm very curious to see how the banks react, because that has gone mainstream the past 2 weeks after the Mark Andreessen interview. I was in DC just last night, and still everyone's talking about it. And the question is, what's the bank's line here? Because they do like that debanking ability, and they'll lobby to protect that. They've been lobbying against that bill for years now. So we'll see how that plays out. But I think there's going to be a push from Congress to try to do something here. The question is just how much can the banks push back? Which again, the banks, their political and their lobbying status, they're also in flux in a lot of places too, especially with Republicans. They've been slipping a lot in that space. So we'll see what happens to the Republican majority if they still hold that power.
Before you hop in, Rodrigo, I'd say, Ron, to your point on the smoking gun, that is right, that all of this was verbally communicated over the telephone. But I think what you probably need is someone to get subpoenaed from some of these banks that were actually getting those phone calls. And you need a framework for them to be able to actually tell the truth on what happened under these confidential supervisory discussions. We just need the truth out there.
Exactly. I was talking with the House Financial Services Committee back in 2023 in March when this was happening. But even before the hearing that happened with the FDIC, OCC, and Fed in November of this year, I was out in Miami, New York, DC. I was talking to a bunch of companies who got debanked. I was just like, hey, look, walk me through it. Trying to help the committee at least just fact find here, because we don't send folks down a rabbit hole here if there's nothing at the end of it. And the fact finding took a long time to get to. And the common fact pattern, again, was always verbal. And that was always the thing that was so shocking, is how is this possible? We had a couple leads of some banking regulators tell us in more of a whistleblower capacity. But then when it came time to be public, or to at least be anonymous, but at least like get their story out, there was fear of retribution. And I think that's very telling too, why a lot of companies went more public after the Joe Rogan interview, because there was just that cultural shift that we've seen post-election. Will that continue? We'll see. But again, it's an issue that both Republicans and Democrats have been vehemently against. But there have been some interests, shockingly, the banks again, who think that it's good to have that. So we'll see how that plays out in the next 2 years, because it adds a deep state almost versus an anti-incumbency approach that's going to go more macro here. So we'll see how it all shakes out.
What's your take, Rodrigo?
So I think Ron is much closer to the metal on this one than me, but my high-level take is it seems like, based in no small part on work that Nick and you guys at Castle Island have done, this issue seems to have broken through to the public discourse with the Joe Rogan interview with Andreessen talking about it. So it feels like it's getting much more attention than it was before. And it's also now whipsawed between both parties being persecuted by this tool. So my hope is that the combination of both sides feeling the burn and this topic being much more front and center means that there'll be some real pressure on the banking regulators to reform. And maybe that is some legislation that is passed in Congress this session, or maybe that's just internally they realize that this is not something to play around with more. So that's my rosy take on the issue, but it feels like everyone acknowledges from both sides that it's a real problem. And it sounds like we're going to get more of the, I don't know if it's going to be a smoking gun, but more of the background info is going to start leaking out. So I think with that, there'll be more added pressure.
Yeah, it'd be good to just be in a position where this is just structurally not possible to implement in the future. I don't know if that's too much to ask for.
Is this where we say Bitcoin solves this or what?
I don't think Bitcoin solves this. I think people need to get cash into the system to buy Bitcoin, ultimately. This is pretty nefarious activity that's been going on here.
There's one thing I could add too. So I stress the timeline again for Congress. We have a very limited window here. So a lot of things I'm telling folks in Congress too is, hey, look, let's do the research, let's do the investigations, but like understanding, let's not take up all of our crypto bandwidth on fact-finding on debanking, because a lot of stuff has been resolved, or at least folks have found other banking partnerships. Bitcoin Strategic Reserve, for example, which doesn't have bipartisan support yet. It's like, hey, look, we have very limited time here. Let's make sure we funnel all the members of Congress into one cohesion to get stablecoins, to get DeFi protections, to get NFT protections. And that's going to be really hard. This banking story, there's going to be several more probably similar types of stories on different topics that are going to derail a lot of the attention for Congress. And it's kind of like herding cats with ADHD. In the macro scale of things, there's a lot of important things, and the market structure bill could probably solve all this, or a stablecoin bill could solve this problem. Let's get back to moving forward. There's going to be a lot of distractions, but we got to keep everyone rowing the same boat forward.
So maybe to build on that, if I just look at this from the perspective of what would open up the industry from a capital formation perspective, I think stablecoin bill and a market structure bill would be the two biggest from my perspective. Is that the right way to think about it in terms of what the priorities should be?
Yes. I've been talking a lot to the TradFi folks recently, since the election. It's mostly the research teams reaching out, but they're having, in some cases, fully dedicated business lines built out already, ready to launch. Others, they're just starting. But they keep pointing to the January 5th, 2023 Fed policy statement that says banks need to have extra risk practices when it comes to banking crypto asset companies or crypto assets generally. They keep pointing to that statement as the main inhibitor for them getting involved, as well as SAB 121. Again, there's a view that SAB 121, I'm pretty confident, will get rolled back in the early parts of the Trump administration. But that Fed policy statement, it's a sleeper, but like that is a really big holdup there. So try and push for that as well. And then lastly, self-custody. That's a tougher battle too. But the self-custody protections, they're never guaranteed, especially in the Republican administration. We saw that with Mnuchin trying to go after self-hosted wallets in the last moments of the Trump administration. So there's still that national security apparatus that is very anti-crypto and anti-self-custody in the Republican space. So it's making sure we can try to get good self-custody protections as much as we can. And that's going to be an uphill battle, but we'll see if we can get some movement there.
Well, those are great call outs and definitely things that the industry needs to be aware of. What do you guys think this looks like with banks and broker-dealers pushing into the industry for the first time? So if some of these rules become clear, you're going to be in a spot where the banks are all going to want to custody crypto assets. The broker-dealers are going to want to connect to secondary trading for not just commodity digital assets, but for security tokens at some point in the future. And so maybe this lobbying effort ends up looking a lot different. Just the cast of characters will look a lot different. Is that a good thing? Is that a bad thing? What should we be aware of?
I can touch the lobbying side quickly. You got to remember, when I was on the lobbying side, when I first got with Ripple and then with BA about a year later, there's like 6 of us. And then when I was at Hillstaff, there's 3 lobbyists, Coin Center, Kristen Smith, and then Digital Chamber of Commerce. So it went from 3 people to I'd say about 75 lobbyists now in DC, which we're still about 3 times smaller than any of the bank lobbyists and their consultant army here. So we're always outgunned in terms of manpower. But things like Twitter actually really carry a lot of weight. People are on Twitter in DC way too much. That stuff does, for better or for worse, as I mentioned earlier, with the JD Vance story, it does carry weight there. So that's been kind of exciting to see. But at least on the lobbying side, BNY Mellon was lobbying me on custody issues back in 2017. Some of them have been involved in this space early on. And again, some of the companies that we all know have been here, like Fidelity, State Street. that were the early movers, but it's a lot more of the more traditional finance folks. I don't want to say explicitly names just yet, but they've hired crypto-specific lobbyists. And I think we're going to see a lot more clashing of banks trying to get their priorities in and try to get regulatory capture and carve out a lot of these folks here in the crypto space. And again, in some cases, crypto might be partnering with a lot of these companies. And so that creates a lot of conflicts here. So it's going to be really interesting to watch. You just got to be careful and see where the narratives spin, what messages folks are saying. Because I think the best part about the crypto policy world is that since we're on X, we're pretty transparent about where we are, for better or for worse. But at least we're very transparent about where a lot of folks are at position-wise. And there's a wide array of views in the crypto industry. And that's going to be, again, we hone that into a good message. So I'm optimistic.
From my perspective, I think it can definitely be helpful to build a really broad coalition and leverage the lobbyist armies that TradFi has. But I think the worry, and it's an obvious one, is that entails that we are basically going to be playing in their space, right? And I think there's a fundamental choice that we still need to make with regards to how crypto is regulated in the United States. And the one path is we update the securities laws a little bit, maybe tailor the disclosures more, and then we treat crypto under that framework. And I think that's probably the most likely scenario if the TradFi lobbyists get their way. But I think the alternative is you recognize that there's fundamental differences between crypto and securities, and maybe you exempt it or you clarify that regime doesn't apply to begin with. And maybe you treat it under like a consumer protection regime or some different regime. I think Ron's smiling a little bit. I'm not sure if he bought that one, but the danger is that choice is not discussed and entered into willingly, but we sleepwalk into it because the TradFi lobbyists are driving narrative and we're applauding whatever exemptive relief we get along the way.
Definitely some thorny topics. And Rodrigo, to your earlier point around some of the private cases that have been brought in this industry, what's the answer there? How does the industry push back on some of the things that have happened maybe outside of just pure play government action?
That's a tricky one. Part of the solution is developing new types of legal entities that are better suited to protect token holders and DAOs and other crypto-enabled communities. So folks like Andreessen have been doing a lot of work pushing the Wyoming DUNA, which is a new type of nonprofit entity in Wyoming that is tailor-made for token holders and could provide DAO members with limited liability. So I think things like that are going to be needed unless we get some statutory change, which I'm not holding my breath for. But the issue now is, I think, quite salient because you basically have a plaintiff's law firm that has developed like a playbook to sue DAOs and investors. And they've ran this playbook like 4 or 5 times with increasing success in the same courts in California. And now they've basically convinced a couple of judges that DAOs are a shady tool to avoid liability. And that's the frame that they've been able to imprint on this. And I think with that framing, judges are understandably not willing to give any flexibility here. I think that risk is going to continue for a while. I think that DUNA is a potential solution, and I'm excited to see more of those in the wild and more projects adopting them. So far, I think there's been a market practice for a lot of the projects that are launching tokens that has been somewhat ossified, but hasn't really been fully tested in courts. So I think part of what's going to happen in this next admin is the design space for those types of structures is opened up a little bit more, and people are going to be looking at different types of entities and looking to be more in the US as opposed to just reflexively trying to form offshore entities.
That makes total sense. Guys, well, this has been a blast. It's very clear that we should not be just resting on our laurels here with what has happened in the election, that there's a lot of work to do. So thank you to both of you for joining and for all you guys are doing. Maybe just in closing, where can we send people to follow your work and learn more about your organizations?
I'm on Twitter at RSEIRA273. It's not a great handle. And you can also find me on Cooley's website.
I'm on Twitter as well, Ron W. Hammond. I do threads every Monday on just what the latest is on Congress and crypto, what's the latest on the ground, and then do memes every quarter just because I love crypto policy memes. So why not?
Love it. All right, guys. Really appreciate you joining today. Thank you.
Thanks, Matt.
Thanks for listening to another episode of On the Brink with Castle Island. To find out more about Castle Island, visit castleisland.vc. To listen to all of our podcast episodes, please go to onthebrink.vc. podcast.com or just click on the tab in our website. Thanks for listening.